So game plan for the week of 8/8. We're just looking at levels, SPY, S&P, where the market's going. So it's important to have a game plan, because once you execute, if things are going properly, you want to have levels to exit, levels to enter, levels to add, levels to scale out. So we're just trying to get into a mode where we're ready for anything that happens in the market. So just starting off with SPY, I'm looking back at a similar level in May to where SPY is trading. SPY traded all week between 407 and, well, actually 406 was the low and 416 was the high on SPY. So we know that it has to break out of that range at some point. Anytime it's traded in a really tight range, it's broken out at some point. So the last time, once we broke the 406 level, then it took us 3 days to get down to 370. So we went from 406 to 370 in 3 days the last time we were trading at this level. So I'm looking for a break above the 416 to run up into this 200 moving average, maybe to 432. So 416 to 432, or we can break down below 405 and move into this range, this moving average. The 20 is at 396, and then the previous range was in between 372 and 390. So I think we'll get that action to some degree. Let's look at the weekly, which has been one of my favorites lately. You see this tight range. You see we haven't really traded in a super tight range for 2 weeks in a row. So expect some kind of breakout. The last time we traded in a super tight range after a big green bar, you see what happened. So right here on May the 30th, we traded between 407 once again and 417. The next week, we went from 415 all the way down to 389. So again, the average range on SPY, average that out and just kind of expect that move. But this week we traded with not very much volume, and again, the market was kind of undecisive. So again, once we break, this is a key level. Let me draw this trend line and set an alert. So we're going to set an alert at 406. Once it breaks below 406, we know that it has a potential to pull back down into the 390s. A lot of times, though, they start the week off with a pop. So we may see 416, 417 before we pull all the way back, just like we did in May when we closed at 417. I'm sorry, we closed at 410, opened up Monday, I believe, at 414. So closed at 410, opened up 4 points higher, and then proceeded to sell off for the rest of the week and into the rest of the next week. So it's going to be our plan. Let's look at the hourly. If we get what we're looking for, you see these trend lines. I mean, we could, like I said, we could easily get a retrace back down to 390. So if we get what we're looking for, if we hold 406 and break above this high of the week, so we can go to 430. If not, we're going to be on the put side, preparing to pull back down to the 390s and even possibly below. So that's going to be the game plan. Adding any kind of breakout, we're going to add above 417, and we will probably be on the bear side. Any break below 406 with a hold. Not too many catalysts this week. I don't think we have any major numbers like CPI or Fed meetings or anything like that. So we may not get any kind of drastic move, but just being ready and having your level set is going to help you execute your game plan. And that's pretty much all I got. What do you got, Alex? Let me see if I can expand. Okay.
Let me know if you can see that.
Yes, it's coming up right now. Okay.
So pretty much what you said, my charts agree with. So there's a couple things to note here. If we look previously on the decline, the amount of volume is significantly higher than the volume on the incline.
Mm-hmm.
So I think that's just standard action. So
Okay.
I believe, like, even if there is a little bit more upside, it does look pretty exhausted up here. So a couple levels to note. If we break this where I have this one here, so it would be around 392. If we don't manage to hold that 392 level, then we'd probably be revisiting the 372s around there. But if we do manage to hold that in the on a larger scale, I believe we would see this level of resistance up here. I'm not using this level right here because typically this standard action does retrace to wave 4s. So this right here, I do believe we will go a little slightly above, but the closest resistance apart from this one right here would be 428. So if we do have any more movement to the upside, I believe 428 is where it would be stopped. But apart from that, I wanted to take a look at as well on the
Candles.
weekly.
Candles, cool.
Yeah. On the weekly here, again, decline, high volume, incline, low volume, standard action. I have my buy side liquidity up here, which means usually where there's buy stops. So I do believe, from a bias perspective, I do think we do want to reach that 430 level, and as soon as we reach that 430 level, I think we'd see new lows. But let me see. Let me load this real quick. We look at some of the important data here. I've shared this with you, but the up here I have the percent of stocks above their 20-day moving average in the S&P 500, and then down here I have an RSI that's sourced from this. So there is a pretty visible divergence going on, which has typically happened when the percent of stocks is high up percentage up here. So if you take a look, let me highlight this for you. If you take a look right here, right here, right here, right here, right here, and as you can see, on those increases, I guess this would be an exception. On those increases, when the percent of stocks, above their 20-day moving average reaches this high percentage, there's typically a big decline ever since the bear market started.
Mm-hmm.
And it also has a divergence on the R side. So what we're seeing here is similar action to previous movement. So I do think that the move that we have right now is going to be exhausted soon. But the levels that you mentioned to hold, like for example the 406 level, and if we do break above the 415, that I wholeheartedly agree with those. Those are pretty much key levels for right now. But yeah, if it does have any more upside, it is looking pretty exhausted, and I've got a couple of bearish divergences going on here. So that's pretty much all I have to share.
Cool. See if I can get my screen back and talk about some more indicators. Whoops. Let's see if I can. Okay. bear with us. Okay, you'll have to stop sharing your screen, I believe.
I did already.
You did?
Sure.
Okay.
Yeah. You're sharing yours already.
Okay. All right, cool.
Yeah.
So, can you see my screen?
Yes.
Okay,
yeah,
cool. All right. So, yeah, let's talk. I use stochastics, and I talk about those levels because they normally can be reliable. But lately, it's like, we've been overbought for a while. We've been overbought on the dailies for, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 sessions. We've been overbought on the daily. And so it's like you may not even trust anything at this point. I'm looking at all of these indicators. Of course, we were overbought on the hourly, 60-minute. We've been overbought once, twice, with really no dip except for a pre-market dip and then back to getting to overbought levels on the stochastic. So I'm looking at the weekly. Again, like I said, low volume to the bullish side and high volume to the bearish side. Again, we're getting overbought again on the weekly, so that's really important because it may take a while. It may take another couple weeks to exhaust, but once we got here last time, we didn't have a green week for quite some time. So 1, 2, 3, 4, 5, 6, 7 weeks of downtrend, and then just this last week, the last few weeks we got 3 green candles. So again, once you finally think you got the market figured out, it goes in another direction because we still didn't have. This is March. We still didn't have 2 green weeks in a row until last week. Last week marked the first week that we had 2 green in a row. So everybody's short, and then once everybody gets short, you see puts again. I mean, people are just too bearish, but you see puts 2 to 1. You got 4.2 million, 2.9 million puts to call ratio. So again, retail is just consistently on the wrong side of the trade because we're basing it on patterns, and these patterns, these algorithms, the market makers, they know what people are trying to are looking at on their charts to try to predict the market, and then they just send it the opposite direction. So every now and then it'll be super predictable, but right now we're just looking at levels. So we should be revisiting these levels, but again, this looks like a pretty strong breakout, and we don't really have anything, like you said, until 428. But on the weekly, we're in between the 20 and the 50 on the weekly. So 428 all the way to 432 is possible this week. And again, we have to break out of this. We have to break out of this $7 range at some point. So it's going to be a pretty drastic move down, in my opinion, or a pretty drastic move up at some point. The consumers,
the tighter the range, the bigger the breakout.
Yeah, the tighter the range, the bigger the breakout. So I mean, you can even relate it to a triangle or a flag. We were tight, and then we finally broke out. So this may be a good opportunity to make some money. And again, these levels are key. Once we break above this 416 and below this 406, then we may see some action. So that's pretty much it. Try to keep it short and sweet. Have a game plan and stick to it. We're going to be looking at the market every single day. So hope this will give you some value and give you some levels to look at in order to make entries and exits. So we'll be back next week. God bless. Take care.